Investors are looking at commodities as the new trading week gets underway, seeing if those prices will rebound from their largest slump in over 3 years. So here with a look at this and some of the day's other big business news headlines, Bloomberg reporter Sheila Dharmarajan. Sheila, good morning to you.
Good morning, Dan.
Okay, so the big question is, are commodities going to be rebounding then after last week's tremendous slide?
Absolutely, Dan. In fact, we are seeing commodities rise across the board. So gold, copper, silver, oil, all rising right now. I want to stop on oil prices for a second. We are hovering right around that $99 to $100 a barrel level. And the thinking for today's rebound is that last week's sell-off was overdone. Remember, last week's commodity actually wiped out about $100 billion in market value. So it was a huge sell-off. A lot of people thinking now, look, that might have been a little bit overdone. We are getting some positive economic news out. You know, German exports were rising. We got that better than expected jobs number on Friday. So perhaps the demand picture isn't looking so bad. Perhaps the sell-off was a little bit overdone. Nevertheless, we are seeing lots of buying in commodities this morning. Don't forget, there's always the bargain hunters out there who are looking for a good deal. Perhaps another reason why we're seeing that rise today.
Silver was the big headline last week. I mean, because of the increased pressure for having those margins be so much larger for speculating trades. I mean, that was just amazing.
No, absolutely. Silver was really the big loser last week, but we are seeing the rebound again this week. Again, perhaps that initial reaction to those margin requirements a little bit overdone. You know, a lot of people were also thinking that oil would be next when it comes to increased margin requirements. So people still waiting, people still a little bit on edge when it comes to commodities, of course, this week. But overall, the trend we are seeing this morning is higher across the board.
All right, settling in then. After 4 years on top, Google lost its spot as the #1 global brand. So who is now leading the pack?
Well, not a surprise here at all, Dan, but Apple, of course, is taking the #1 brand whenever you're talking about the most valuable technology brands out there. Now, this is all data that's coming out from WPP, which is a big advertising agency. So Apple #1, you know, the iPad really helping their standings right now. In fact, the brand value climbed about 84% over the past year, and now they're actually valuing it at around $154 billion. You know, Google is still there. It's still in the top 3, so still going well. A couple of other tech notables. IBM actually doing quite well. They climbed the ranks a bit this year. Everyone, of course, wants to know about Facebook. Well, Facebook is number 35. Finally, I do want to mention the Chinese technology names, because if you actually look at the top 100 brands, Chinese brands actually make up about 12 of them. So a lot of brand recognition when it comes to these Chinese companies now as well.
Very interesting, playing back and forth on who's the leaderboard there. The Nikkei, now that we're overseas, they're taking a hit on news that the Japanese government is going to be shutting down another nuclear power plant. Fill us in on the details there.
Yeah, so the Nikkei did close lower. In fact, it was down about 0.6%. And this is after news from what's called Chubu Electric Company. Now, Chubu Electric Company, they run a lot of the nuclear reactors in Japan. They actually answered some government calls to shut down one of their nuclear reactors. The specific name is Hamaoka. And they're shutting it down because the government wants them to basically refortify the reactor so it can withstand the type of tsunami that we saw before. So they are shutting that down. They are taking that offline. You know, clearly not a lot of good news for the stockholders there. In fact, Chubu stock fell to an 11-year low. That did bring down the markets a little bit. Nikkei was off today about 0.6%. So, of course, the recovery, the building, the aftermath of the Japanese tsunami still happening loud and clear. This is certainly just the latest in that.
The Treasury Secretary, Tim Geithner, is going to be meeting with some Chinese officials this week. A lot of people are going to be watching these meetings. So what is on the agenda?
Yeah, so a lot of big meetings between the U.S. and China this week. So Tim Geithner sitting down with Chinese officials. Really no lack of topics to talk about, right? There are so many things on people's mind right now. But a couple of the big highlights that economists are pointing to, of course, is America's manufacturing deficit with China. Human rights is always a big issue. And also their currency, the yuan. Now, I want to spend a minute on the currency because, remember, this has been a big point of debate, particularly when it comes to American manufacturers. They're arguing that the Chinese yuan is artificially undervalued. So it obviously makes Chinese goods seem a lot cheaper. So there was a lot of pressure on the Chinese government to let it become more free-floating, let that value appreciate a little bit. You know, they did do that a little bit back in June. They did peg it to some indices, which let it free float a little bit. We did see the yuan rise about 5% over the past 6 months or so. But, you know, that's really just not enough, according to these American manufacturers. They're saying that the yuan is undervalued by 40%. So still a long way to go, and certainly will be a hot topic today whenever those meetings get underway.
Despite the fact of them raising their interest rates as well.
Absolutely. I mean, one of the reasons they did with it, though, was because they wanted to fight off imported inflation. So they are doing a lot of moves there, and we are seeing that reflected in the yuan. I think the word from American manufacturers is it's just not enough. They want to see more aggressive action happen.
Well, 40% is obviously a huge divide there. What's the latest on the European Union's bailout plans?
Well, the troubles just keep happening there. And really at the center of all the European bailout concerns, of course, is the Greek debt load. So there were some emergency unofficial meetings that happened over the weekend where European officials met to talk about how they can restructure, how they can help the Greek debt load out a lot more. Keep in mind, Dan, about $350 billion in bailout funds have already been shipped out to the Greek government. So a lot of money is out there. What we're hearing now is that more money may be on the way. They may be giving some more funds to help with the bailout plan there. They really want to avoid restructuring the debt entirely. They want to keep everyone whole here. So a lot of back and forth happening right now. Traders, I think, are a little bit wary. You can see that when you take a look at the euro currency. The euro currency, in fact, dropping. Also, some headline news coming out from S&P. They, in fact, cut the rating on Greek debt to below investment grade, so officially at junk level. Those worries just keep piling up for Greek.
Yeah, absolutely. I want to go back very quickly stateside now. The housing market, not good for the U.S. What are the details there?
We actually got a very troubling report. Now, this is from Zillow.com. They track a lot of the online real estate and, of course, the U.S. housing industry. In fact, housing values, about 75% of homes in the U.S. lost value in the first quarter of this year. So that's really just a staggering amount of homes when you think about how many of them lost value. Also, when you take a look at foreclosures, we are still at record highs there. And the number of houses that are seriously delinquent, about 1.5 million. So it's not as if just the foreclosure issue wasn't enough. There's a whole nother wave of houses that are seriously delinquent, of course, could be joining those foreclosure ranks soon. Housing market very much still weakened, very much still in trouble. A lot of digging out to happen there. This report certainly underscoring that.
It's tough to see light at the end of this tunnel, certainly. All right, Bloomberg's Sheila Dharmarajan. Sheila, thank you so much for that this morning. We appreciate it.
Thank you.